Good morning, Paul Georgi from Allendale. It's Tuesday morning, June 14th. Grain markets are under pressure here this morning. Looks like we're going to open lower across the board in the grains here at 9:30, kind of in line with what the electronic trade closed at here at 7:15. We did have some news out here this morning, however. Nopa Crush come out with their numbers. Trade was estimating around a 121.5, came in at 120.3, so that could be construed a little bit negative and put a little more pressure on the nearby soybean contracts. Other news, corn market is still strong in the cash side of things. The Eastern Corn Belt cash markets are extremely hot, continuing that way. Traders are concerned, and this is the cash traders, are concerned about filling that gap between the old crop and new crop, especially when it comes to August, September. In the southern Midwest, where demand is going to need to be filled during that time because of the late planting progress that has been made here over the last several months. And the USDA did release planting progress yesterday, put corn at 99% complete versus 99% average. Soybeans, we increased about 20% during 1 week in planting progress there, went from 68% up to 87%, and 89% is average. The spring wheat, 88% complete versus 100% normal. So that the spring wheat still is some problems, and talking to people in the North Dakota area, basically feel like spring wheat planting is complete at 88%. So we'll see if producers put any more in the ground there this week. But conditions did improve. We had corn conditions improve from 67 up to 69. However, normal, or I should say last year, we had 77% was in the good to excellent category in corn. Soybeans, the first number we had of the year, 67% good to excellent versus a year ago at 73%. And then the spring wheat crop at 68% good to excellent versus 86% average. So that is still a very big concern in the as far as crop conditions go, as far as the quality. And traders are going to continue to talk about that, focus on that, especially as we get closer to this June 30th report. That date is, we've got maybe the biggest report of the year for the grain industry, when the USDA gives us the planted acres, the actual planted acres, where they go out and survey producers and get an accurate number on the amount of corn and soybeans that were planted. Other issues the grain market has here today is that technically we're overbought. We've seen that the last few days. We went up and made new highs last week, and now we've set back and still in an uptrend on corn. Soybeans in a more of a sideways trend, and the wheat market, I think you'd have to call that a downtrend at this point, and we could see that market continue under pressure as we see the spreads changing in the soft red wheat here in Chicago. The nearby contracts are going down slower than the deferred contracts, which allow the holders of cash grain to deliver that grain against the futures contract, and it opens up more of a supply that could be used for livestock producers and livestock feeders to replace the high price of corn. So it looks like the wheat market may drag on the corn market here a bit and allow us to fill that gap between the old crop and new crop. We're also finished with the Goldman roll that was complete yesterday. So we've also got Senator Coburn from Oklahoma has said that, or has forced a vote on the ethanol bill here today. That we'll be watching very closely. Other outside markets, news and prices are kind of quiet here today, with the dollar basically steady to a little lower, crude a little higher, and the gold about unchanged to a little higher here as we speak. The stock market, however, is showing a little bit of strength, so may get some support in the livestock market off of that, as the cattle cutout values were higher. We had $1.44 higher in choice. Select was up 38 cents yesterday. And cash markets this week could go either way. We could be $1 higher, $1 lower. A lot of that's going to depend on what kind of strength, how the performance in the futures can go, and who will hold out for higher prices, if the or who gives in first, you might say. If the packers give in and say, I need these cattle, they may have to pay $1 higher to get them this week. In the pork complex, cutout values there were higher yesterday, up 67 cents. The cash markets steady to firm there. Tight supplies here in the nearby contracts is supporting the in the nearby cash markets, supporting nearby futures. So looks like we could see some more strength in the pork complex as demand internationally as well as domestically looks to be improving. So if you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning.